What if I told you that every single American citizen, including newborn babies, already owes over $100,000? Not for a house, not for a car, not for college, but simply for being alive. The United States is carrying more than $34 trillion in national debt. That number is so large that it stops feeling real. If you tried to count to 34 trillion, one number per second, it would take you over 1 million years. Civilizations have risen and fallen in less time than it would take to count America's debt out loud. So the question is not whether America has debt. The question is, how will it ever be repaid? Or perhaps more importantly, does it even need to be? To understand this, we have to step back. Debt is not new to America. After the Revolutionary War, the young nation was financially exhausted. It owed money to France. It owed money to private lenders. It owed money to its own citizens. At that moment, the country could have fractured financially. But Alexander Hamilton made a controversial decision. He convinced the federal government to assume the state's debts. His logic was simple but bold. A nation that honors its debts builds credibility, and credibility builds power. Debt, in his view, was not weakness. It was leverage, if managed correctly. That decision helped establish America's financial foundation. Fast forward to World War II. The United States borrowed massively to fund the war effort. Factories ran day and night. Bonds were sold to citizens. The government spent at unprecedented levels. By the end of the war, U.S. debt exceeded 100% of GDP. That sounds familiar. But here's what's fascinating. After the war, America didn't panic. It didn't slash spending overnight. It didn't collapse. Instead, it entered one of the greatest economic expansions in history. The middle class exploded in size. Highways connected the nation. New industries emerged. Productivity surged. And as the economy grew, the debt became smaller relative to the size of that growing economy. The burden shrank, not because the debt disappeared, but because growth outpaced it. Growth diluted it. That is a critical lesson. But today feels different. Today, America's debt once again exceeds its entire annual economic output. The difference is that today's spending is not tied to a single temporary war. It is structural. Social Security, Medicare, defense commitments, interest payments, long-term obligations that continue year after year. And here's something most people overlook. Interest payments on the national debt are now one of the fastest-growing categories of federal spending. Think about that for a moment. America is borrowing money to pay interest on money it already borrowed. That's not inherently catastrophic, but it does change the dynamics. Now, before we continue, I want to quickly say something. If you listened until now, that means you're genuinely interested in this topic. So please subscribe and leave a comment. I answer to each and every one. Thank you. Now let's get back to it. When people imagine America's debt, they often picture foreign governments holding all the power. They imagine China or some distant country having financial control. But reality is more complex. Roughly 70% of U.S. debt is held domestically. Pension funds, banks, insurance companies, mutual funds, the Federal Reserve, even Social Security trust funds. In many ways, America owes money to itself. That doesn't make it meaningless, but it changes the narrative. Foreign countries like China and Japan do hold U.S. debt, but they hold a relatively small percentage compared to domestic holders. And here is where America holds a unique advantage. The debt is issued in U.S. dollars, And the US dollar is the world's primary reserve currency. Global trade runs on it. Oil is priced in it. Central banks hold it. When countries transact internationally, they often settle in dollars. That gives the United States enormous monetary flexibility. If necessary, the US government can create dollars. But that power comes with risk. Inflation. If too many dollars chase too few goods, prices rise. And when inflation rises, purchasing power falls. History has shown us something important. Empires rarely collapse because they run out of money overnight. They collapse because confidence erodes. Let me tell you a short story. In ancient Rome, when the empire needed more funds for expansion and military campaigns, it began reducing the silver content in its coins. At first, the change was small, almost unnoticeable, but over time, coins that once contained high levels of silver became diluted with cheaper metals. People began to notice. Merchants demanded more coins for the same goods. Prices rose, trust weakened. Rome did not collapse in a single dramatic moment. It slowly lost monetary credibility. Now, is America Rome? No. The United States operates in a far more complex and modern financial system. But history doesn't repeat exactly, it rhymes. So, can America repay its debt? Not in the way a family repays a mortgage. Governments operate differently. Debt is rarely paid off. It is rolled over, managed, refinanced. There are realistically 4 possible paths forward. 1. Grow out of it. If the economy grows faster than the debt grows, the ratio stabilizes or declines. Innovation, productivity, technological breakthroughs, these can change the trajectory dramatically. Artificial intelligence, energy production, manufacturing reshoring, unexpected productivity gains. History is full of moments where innovation surprised everyone. 2. Inflated away. Moderate inflation reduces the real value of debt over time. But inflation is a hidden tax. It transfers wealth quietly, and if it accelerates too much, it damages trust. 3. Cut spending significantly. That would mean difficult political choices, reforming entitlement programs, reducing discretionary spending, restructuring priorities. But democracies tend to struggle with painful, short-term sacrifices. And 4. Default. A true default by the United States would shake global markets. Treasury bonds are considered among the safest assets in the world. They are the foundation of countless financial systems. If that foundation cracks, ripple effects would be global. But here is something remarkable. Despite the headlines, despite political polarization, despite debt-ceiling battles, investors still buy U.S. treasuries. In fact, during times of global crisis, demand for U.S. debt often increases. When uncertainty rises, capital doesn't flee America. It runs toward it. That is extraordinary. Trust is powerful. It takes decades to build and moments to destroy. So the real question may not be, will America repay its debt? The real question is, will the world continue to trust the system? Will global markets continue to believe in U.S. productivity? Will innovation continue? Will institutions remain credible? Debt alone does not end nations. Loss of confidence does. As long as the dollar remains central to global trade, as long as the U.S. economy remains dynamic, as long as investors believe the system is stable, the debt can be managed. But if confidence erodes, if growth stalls, if political paralysis deepens, then the math changes. The story of America's debt is not just about numbers. It is about psychology, power, demographics, productivity, and belief. So what do you predict will happen? Will America grow its way forward? Will inflation slowly reshape the burden? Will the system adapt as it has before? Or will the next chapter look very different from the last century? Let me know what you think in the comments. Thanks for watching, and I'll see you in the next one.